Pound pulled through 200-day MA by softer U.S. dollar tone, Scotiabank. Euro jumps on the day, Scotiabank. Canadian dollar holds range on the day, Scotiabank. U.S. dollar trades broadly lower, Scotiabank.
Forex Live European FX News Wrap. Euro stays upbeat as dollar slumps. DAX rebounds strongly. U.S. dollar correction continues with DXY index at 4-month low.
Abercrombie & Fitch forecasts cautious 3% to 5% sales growth in 2025. Gold touched softer after Secretary Lutnick takes the sting out of tariffs.
Eurozone producer prices rise more than forecast. Pound sterling strengthens against U.S. dollar as investors reassess Trump tariffs outcome. Yeah, good morning. Okay, let's do a poll. Okay, let's do a poll. All right, there you go. Let's see how much time until the news. 3 minutes. Two minutes. It won't let me vote. Too bad for the Wayne. Well, good morning. Good to have you here. Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Okay, we're getting close to another dumb prediction. ADP, employment change. This is small and medium-sized businesses in the United States of America, otherwise known as God's country. So we'll take a look at that section of the economy. And then on Friday, we're doing non-farm payrolls over at the FX Street YouTube channel. And that is two different
Kickstart
studies.
the FX trading day with a technical look at Euro US dollar yen, and pound US dollar.
So anyways, this is just looking at specifically small and medium-sized businesses. Okay, last time we got $1.83. Okay, 54 seconds. Who's excited? Oh, I'm all tingly. Now, I've actually analyzed another dumb prediction, ADP payrolls, going back many. And it's likely it'll produce some level of volatility, but there is no reliable, repeatable pattern. So you might get a trade, but it's not something you hang on to, at least based on past performance, which does not predict future results. But you probably won't hang on to this for 3 weeks or 3 hours, but you might get a little skippy scalp out of it. But even that is inconclusive. Here we go. 6, 5, 4, 3, 2, 1.
Kickstart the FX trading day with a technical look
77.
at Euro US dollar yen, and pound US dollar.
Whoa!
Pulled through 200-day MA by softer U.S. dollar tone, Scotiabank. Euro jumps on the
Gee
day.
whiz, I thought it'd be low, but not that
Canadian
low.
dollar holds range on the day, Scotiabank. U.S. dollar trades broadly lower, Scotiabank.
Dude.
Forex Live European FX News Wrap. Euro stays upbeat as dollar slumps. DAX rebounds strongly. U.S. dollar correction continues with DXY index at 4-month low.
Abercrombie & Fitch forecasts cautious 3% to 5% sales growth in 2025. Gold touched softer after Secretary Lutnick takes the sting out of tariffs.
Eurozone producer prices rise more than forecast.
Okay, definitely some dollar weakness, although these are daily. Maybe let me grab the other one. Yeah, that's for day trading. Let's do intraday. Yeah. So that's risk on. Pound collapsed though, huh? The pound was really good up until recently. So yeah, euro, yeah. Gee whiz. Buy euro, sell everything. What? We haven't heard that in a while.
ADP employment change February has come out, 77K.
Eurozone producer prices rise more than forecast.
We haven't heard that in a while. Whoa. Yeah, I had the developers working yesterday. A team of 2 people been working on the squawk for you. Yeah. So anyways, I couldn't vote, so I suppose I can't prove. Yeah, I got it right. I can't prove it. I did think low, but I didn't think 77 low. And nobody did, huh? Wowzer. Only 12 votes. Boo. Yeah, boo. Anyways, so statistically irrelevant. But Oh my God. So anyways, nice to have real-time news, huh? Now, it's a little slow because of the latency on YouTube. But if you're logged into traders.com, it's as close to real time as one could possibly hope for. Cool. So now we have ISM services coming out in 1 hour and 11 minutes. And services, okay, the last number was out of Canada was bad. Out of the United States, it was good, but for some reason we're expecting bad. That would be no good. No good. Yeah, really, that is very disinflationary for the United States if that's true. Oh, wait. Global. Okay, and there's our number, 52.6. That makes sense. Okay. I'm like, how did they get that? Why? Oh, global. Sorry. Yeah. Well, so this is the number. Yeah, so that's great. That's good, especially comparatively. Yeah. Yeah, new orders contracting. This is manufacturing. Employment contracting. Inventories contracting, which is good. And so inventories by customers are low, too low, but they're not buying anything new? Wow. And prices are going up. Yeah. Now, some of these export orders and stuff like that, sometimes what you'll see, like right now, companies are front-running tariffs. So it might be good now, but bad later. But anyways, at least we're over 50. So ISM services will come out today at 10. Cool, right? Cool. So we'll get an update to this.
Lutnick, some April 2nd tariffs will be right away, others will a month or two.
Breaking ADP employment change report came in at 77K in February. United States ADP employment change registered at 77K, below expectations, 140K in February. ADP February U.S. employment, plus 77K versus PUSI 140K expected.
Okay, this is interesting now because we have climbed above and held pretty firm. Okay, there was no way of knowing this technically until now, but this is held, which is actually last year's projected low, M3 to M1, okay? All right, so now it's held. We had some topsy-turvy stuff going on here. Part of this is that news out of Germany of changing their constitution to allow more spending and all that kind of stuff, okay? But nonetheless, this is held. And if this continues, okay, if it continues, this is our target. The threat right now is here and here
to this. Now, it's not the scenario I expected, but I suppose we got close enough to parity for the powers of B. We did make a higher high. There's nothing I can do about that. And now we're in here, okay? So if that's the new wave, and look at this old, okay, we were caught here. So the interesting thing about technicals is that it is what it is. Even if you didn't expect it, I suppose that's irrelevant, right? Yeah. Oh, I would have liked to expect it. Yeah, well, whatever, irrelevant. So it's more like, now do we adapt? How do we adapt? Well, the way I look at it is I don't really have a choice. Okay? That is one scenario. And let me do this in a different green, maybe. Okay? At least sideways, until we get a change in direction. This assumes a breakout. You don't have to assume a breakout to the upside. So let me actually redo that. Okay? You see? It's very difficult for me to continue to be bearish in the moment. Something has changed. Okay? Germany is going to use government spending to increase GDP. That's it. That happened yesterday. We have a Secretary of the U.S. Treasury talking about a weak dollar policy. Okay, yeah, all of that. We had a State of the Union address yesterday. Yep, that happened. We have fallen oil prices, all this kind of stuff. Like, yeah, things are fundamentally changing. And so I talked about this a couple of hours ago. So most of you already know. But just if you're not sure how to get that type of data, it's easy. Okay. Yeah. And so on a weekly basis, we just got to a scenario just very, 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 very recently in which dollar is expected to be weak, yen is expected to be weak, Swissy is expected to be weak. Hasn't quite happened on the daily observation, hasn't quite happened on the monthly observation, but it might be plausibly starting to happen. It's plausible. And that's where you go to these things. You're like, well, are those things true in the moment? So you go to your indices. And the assumption, okay? Assumption, this is just correlation. In a scenario of risk on, dollar tends to be weak. It's weak. Yen tends to be weak. It's weak. Swissy tends to be weak. It's weak. Now, Aussie typically is strong in a scenario. It's not. Euro is typically strong. It is. CAD is typically strong. No. I mean, they're double bottoming, but no. Stay away. Kiwi. No. Stay away. Maybe it's double bottoming. Maybe it's stabilizing. Whatever, dude. Stay away. What about gold? Yeah, what about gold? What about S&P 500? Yeah, these are great questions. Okay. Should you be a buyer of the stock market today? That's not how I have it set.
Okay? If you remember the training I gave you, I'm talking about the divergence here. Okay, does that look bullish to you? That looks like it's neutral. That's the 200-day moving average. Oops, come on now. Okay. Do I think it's going to go all the way down here? That seems pretty low to me. It would take probably the year to be able to do that, because you would need down, up, and then down. This would be March, April. We'll put March, April would be the down. May to July would be the up. July to September would be down. And then October to December would be up. Yeah, it's plausible. Okay. What does this tell you? Let's do some technical analysis. What does this tell you? On the weekly chart, so now you're making investment decisions, or maybe you're just analyzing the trend. Okay, that's fair. The angle and separation between the 2155 is diminishing. It's bullish, but less bullish. Yeah. Yeah. So that's not bullish. Just one way to look at it. Okay? Because there's no way of knowing. So the last time we had a scenario like that was this. And it fell, what is that, a year? It fell for a year. Could it fall the rest of the year? Dude, I don't know. But I can't confirm it using an oscillator. What do you guys think? You're like, Wayne, that's too far out. All right, well, I'm trying to find trend. So if you look at oscillators, a different oscillator, this one is telling me. Now, bad gurus would tell you it's overbought and buy it. That's just wrong. So if you see a guru tell you to buy it here, they don't know what they're talking about. It's oversold. Now, oversold and overbought, that people get, I mean, it's sort of like when somebody says, oh, well, it's priced in the market. What they mean is they don't know. It's oversold, it's overbought. Whatever, that's very subjective. What is it actually saying? Price on this daily chart is making lower lows and not making higher highs. So do you buy that? Only if you're a broke-ass trader. A bull wouldn't buy that. A bear wouldn't buy it. So only a bat would buy it. A broke-ass trader. So no. So what do you have to wait for if you did want to buy it? Well, that's what stochastics is telling you. So you have to understand, well, what is stochastics telling me? Well, currently, okay, it's making lower highs and lower lows. Wouldn't you want your oscillator to tell you that it's not making lower lows? That's the first one. And then at some point, it is making higher highs, which then probably would lead you to seeing higher lows. So wouldn't you want to know that? Yeah, because if you're a bull and you want to own this, what are you trying to do? Higher high, higher low, higher high, higher low, higher high, higher low, right? Yeah. Is that happening right now? No. I don't even need to look at the candles. Has anyone here heard of a service called Forex Made Easy? It was around maybe 25 years ago. And this is what they traded. That's it. Oops, I didn't mean to delete the indicator. Oh no, help me, Jim. What do I do? Jim knows. Open, deleted, no. I don't even have my chat open. Where'd my chat go? Here it is. Well, I guess I could just re-enter it. No, we'll leave it. Anyway, so Forex Made Easy was just MACD. People paid more money than you're probably paying for your infrastructure. I'm trying to get the chat. It's fighting me. Yeah. So anyways, MACD, now this, if all I did was this, okay, I don't have a good sense of trend. This is why I use combinations. So let's go back out here. Standard. Okay. Okay, cool. So I am looking at S&P 500. And it's bullish, but collapsing. And if I was very astute with my MACD, I don't want to overdo it because you know that I already know, but top, drop, top, drop, top, right? What does this mean? My guess is somewhere in here is a double top. Okay, it went high, it's still bullish. They tried again and failed here, and then failed again. So lower high, double top, or head and shoulders type scenario. And then the bigger drop, so bulls definitely took some profit. And now the lower high, so now we have, it's bearish. And also you can see the relative direction is less risk on. And the other thing that I can see here is this is not bearish yet. It's not bearish. So we are bullish. This is what I know. We are still bulls. But there are less bulls. And we've hit some sort of top. That's what all of this is. And this in particular, now we have the lower high, don't we? So that tells me we're either down to a 55 or down to a 200. Somewhere up here, this is very bullish, less bullish, not bullish, and exodus, but not bearish. It's all about the bulls. All right. So if we get below this area here, we are bears. Is that happening right now? No, not yet. So maybe somewhere around where we are, and we know this because we're kind of in this zone, maybe if it's going to go bullish again, meaning these people buy back, you'd probably see it fairly soon, and you would want this to go back up, which means we got a 2155 kiss, and then we move back up to make new higher highs. So basically it's a range. This double top, if you're a bull, is not a double top. We're just a pullback, and then we're going to go form a bottom of the range, go back to the top of the range, break out, pull back, and then now we have an uptrend again. And we get all of this from this chart. So we know that we're at a point of, if any more bulls take profit, it becomes bearish. It invites the bears in. Are we there yet? Not yet. It's plausible. So now what do we look for? We look at this. What does this tell us? I can look at this and say, we're not making higher highs and higher lows. Okay? Can you see that? So do I buy? We used to be bullish. Now we're essentially as close to neutral as you can get with leaning towards bullishness. We're bullishly neutral, according to the MACD. Okay? And then we look at this oscillator, which is completely different math, and we are making lower highs and lower lows. Do we buy? No. When do we buy? If we're going to buy, I'm not telling you that you should, but if we were going to use oscillators and we were going to buy the S&P 500, when? Okay? When this is back up here, what does that tell me? That the candles themselves stopped making lower lows and have begun making higher highs. I don't even need to see the candle. I use the oscillator. Now, most gurus don't understand the math behind any of this. So they just say, it's oversold. That's not what it says. The math doesn't say calculate a valuation of an asset. What is this asset worth? What is the S&P 500 worth? Oh, well, the price is too low. That's not what it says. It's measuring the candles. So this is, you got to be careful. It could stay down here for 3 weeks and S&P 500 continues to make lower lows, lower lows, lower lows, lower highs, lower lows, lower highs, lower lows. And it'll stay oversold because it's not oversold. Shoot, is it oversold if everybody is selling it? No, it's a trend. So a guru that tells you this is a buy, doesn't know what the heck they're talking about. This could drop for 3 weeks. It could be a sell signal. You see how ridiculous YouTube gurus are? I'm like, well, bust out the math. Explain the math to me. Oh, I don't like math. Oh, fundamentals, they're phooey. Right? Fundamentals don't make any sense. It's all in the price. It's true. To them, fundamentals don't make sense. Or if you're going to use technicals only, you better be a heck of a lot better than most YouTube gurus, huh? So anyways, look, does that say buy? No, it means lower highs and lower lows. It means the opposite. And you can get that just by looking at this stuff. See? So if all you know is how to use MACD and stochastics, you should be able to do price action. So I discovered this first. This is how I discovered price action. First of all, if you just throw a MACD onto your chart, it won't work. And if you just throw a stochastics on your chart, that won't work. So I discovered oscillators by asking myself a question and then found the math to solve the problem. And the two questions are the markets bullish or bearish? And are they accelerating or decelerating? Oh, okay. Then I'm like, well, what kind of math will show me that? So I did the research and I found the math. And then I said, well, what are the variables that I require to be able to see what I'm looking to see, what I'm trying to find? What variables would be necessary? So I plugged those in. And this is what you see. So, in going back to the Forex Made Easy, the very, 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 very beginning, remember, most traders, like 90% of traders did not use charts. I want you to grasp that. I had professional fund managers laugh in my face because I did technical analysis, because it was so ridiculous that somebody would do that. Yeah, well, they don't laugh anymore. But if you're going to use it, know it. Be very good. And so I asked myself, is the market bullish or bearish? And is the market accelerating or decelerating? And so I separated market from price. Then I found two indicators that did the math that I required. One was for the market, one was for price. See, the market could be bearish, but price could be bullish. Oh, okay. No Sky Killer pivots came a few years later because I was trying to solve another math problem, and it turned out pivot points were part of that. So this goes all the way back to the very, very, very beginning. And I could look at this and say, well, this asset is bullish, but is struggling right now. Is this a good opportunity? No, not really. Is this a good opportunity to sell? I'm a bit late if I wanted to sell. And it's counter trend, so I better be I have to have a strong conviction. But if I'm this late, then I don't have a strong conviction. So I'm like, it's not really I should have been selling a lot earlier. But technically, it's bullish. So that's not. So I found in the beginning, I did better when buying dips in an uptrend and selling rips in a downtrend. Now, that sounds obvious, but it wasn't obvious to me 20-something years ago because I'd never been a trader. I didn't know anything about technical analysis, didn't know anything about price action, I didn't even know about fundamentals. I knew nothing. So I had to kind of discover all this, and I leaned on the math. And remember, charts didn't even make sense. So patterns on charts, that seemed silly. So I leaned on the math. And so most of you have seen what my sort of my overnight volatility quantitative strategy that I started with. And then as I did that, I started to use technicals a little bit more. See, my first strategy was all quantitative. It was all fundamental quantitative. No, it wasn't fundamental of macroeconomics because I didn't understand macroeconomics, but it was quantitative based on market analysis. So anyway, so then I decided I wanted to get better at technical analysis because I wanted to improve, right? Improve, that's it. Because things would start and stop and I couldn't figure out why they stopped and started. So then, so I drilled in, I asked myself the question, what direction is the market? And is it speeding up or slowing down? Makes sense. And so I did the research to find the math. Then I found the math. I used these two things. And then I said, well, how am I going to measure market? How am I going to measure price? So I experimented, founded the variables, put the variables into these two different oscillators, looking at them for two different functions. And then I knew I performed better when I lined them up, meaning I sold during downtrends and I bought during uptrends. And then I did better if I bought low in uptrends or if I sold high in downtrends. And I get all of this information right here. And what did I discover? Price action. Except people didn't really talk about price action because they didn't really use candles the same way we use them now. It was a little different. And so I could look at this and draw you the chart. Most people couldn't draw their oscillators by looking at a chart. I can do it either way. It doesn't matter to me. Because I started here with the math. So this is my evolution. This is why I'm sharing this, right? It's just like, how did we get to these setups? How did we get to this knowledge? I didn't have a guru. There wasn't a book. There wasn't a training course. There wasn't YouTube. There wasn't Amazon.com. Charts were $300 a month, and they were not connected to your trading platform. So charts were a sort of an obscure thing. And so that's why I learned it so differently. But it gives me a level of understanding that I think is helpful. And then so I chuckle when you see a guru say, well, buy this and sell that and buy this and sell that. See, look. No, that's not how it works. That's not how it works. That's what it looks like, but that's not how it works. For example, that means you would be buying and selling irregardless of whether the trend is up or down. You have to know that you're going to get mediocre results. If you don't buy into that, we're going to have a very difficult relationship, right? Where you're buying and selling in bullish markets and bearish markets? No. Well, what if you only sold in bearish markets? And what if you only bought in bullish markets? Oh, well, yeah, you probably, right? Well, on how the issue with MT4 is that it has a MACD with one line. It doesn't make any sense. And after 20 years of, or 15 years of MT4 metaquotes being around, they're so stupid of a company that they haven't updated that. They're like, dude, why don't you just pop in a proper MACD? And I think it's them that have the default red line set to a color of yellow. And it's been 15 years and they haven't updated it. Why? Because they're that dumb. But whatever. Okay? It's not illegal to be dumb. Okay? But I can't fix stupid. So anyway, so then you have to find another MACD on hell with a histogram and 2 lines. Then it's actually helpful. And so, yeah, that's why there's a different one, like, oh, right, the Osama bin indicator, the Osama bin MACD. Yeah, Lucas, the reason I used HotCom back then is it was the only software package, okay, it was that would allow for live screen sharing. Because back then, you could share a camera and a PowerPoint deck. And by the way, one of my first startups, I was one of the first people in the world. By people, I mean my company. My company was one of the first ever in the history of the world to sync live video with a PowerPoint presentation. The second thing, and we were struggling with this because it wasn't able to be done at the moment, but to have an online membership program where you would be able to pay a monthly fee and have access to the recordings of the videos in which you can watch something that happened live in the past and have the video and the PowerPoints sync. But the idea of paying a membership for a website, having your credit card billed, and having members have areas on the website unlocked and non-paying members locked, and if your credit card failed to lock or if it went through to make sure it was unlocked, that didn't exist yet. And we were working on that, but we got to the point where I was literally one of the first companies in the world to be able to sync those things, which is kind of interesting. And now it's so easy. So when I decided, after my business planning retreat with myself, the famous one that happened at the Ritz-Carlton, where I bailed myself out of a very tough emotional period as a trader, where I went through a significant drawdown, and it freaked me out. So I did my business planning retreat, and I'm like, I need to surround myself with successful people, because all my success in the past up until that point was because I was surrounded by other like-minded people. So I'm like, okay, I need to surround myself with other like-minded people. How the heck am I going to find Forex traders? I don't know any Forex traders. So I'm like, well, I think the way to do it is just show everybody what I learned through my process of educating myself and experimentation to build a Forex trading strategy. So I need a way to get people to listen to me so I can share, because it was difficult. And I felt it was a secret too. So I'm like, I'm going to give the secret away and people are going to be pissed, but I'm okay to be that guy. So I did research, and HotCom, Lucas, which is, years after my startup, was the only one I could find where you could share your desktop. It was built originally for tech support. And yeah, right? It was built for tech support. It wasn't even built for what we were using it for. So then I said, I'm going to find people and I'm going to put my charts over this HotCom thing so people can see what I'm actually doing live. Instead of me building a PowerPoint presentation of what I'm telling you now, we just go to the live market. It hadn't been done before. There might have been, in the whole world, 5 traders. I think Ed Ponzi was one of them. Me and Ed and 2 or 3 people, like, in the entire world. So that was my goal, to share. And then I needed an audience. So I wrote a short ebook on how to trade Forex. Basically, all the different strategies that I had developed. I just wrote them all down. I built an ebook and I sold them on eBay for $1. And in that book, if you paid the $1, by the way, I had to have the technology, so if you paid the $1, you immediately got emailed the book, which was unusual back then. But you bought it for the $1 and then bing, it arrived to your email address. Okay, cool. You read the book and it said in there in multiple places, I'll spend 1 hour with you in my hotcom room. Free mentorship, free training. We'll just meet and we'll talk. You can ask me anything you want. I'll show you what I'm doing. I'll show you my charts. You can ask me questions, whatever. We'll meet for an hour. And then I invited you, like, well, if you want to hang out with me, I have a group on Hotcom where we talk every morning for 2 or 3 hours, and I'll show you what I'm doing and how I'm doing it and what I'm thinking about. So that was good, and we got our little crew there. Jim might have been part of that very, very, very beginning. So then I'm like, I want more people. I'm making a difference. I really like this. I didn't realize it was going to be what it became. I just wanted to share. That's all I wanted to do. So I found a little audience. We had a couple of dozen people. I'm like, this is pretty sweet. But I want to reach more people. And I'm like, well, where are they? And I'm like, well, there's only one website I know that's Forex related, and that's called FX Street. Yeah. So I contact FX Street. And I'm like, I have this Hotcom thing, and I'm showing everybody in live markets, let's do something together. And they're like, yeah, let's do it. And I'm like, what's the biggest thing? And they're like, non-farm payrolls. But the problem is the volatility is crazy. People, and the gurus out there are pitching get-rich-quick schemes. I'm like, good. Tell you what, I'll teach people how to be patient and disciplined. I'll do non-farm payrolls. I'll do live charts. I won't do power presentations. And they're like, well, we don't have that capability. We don't have Hotcom. We have chat. Literally, my first 3 or 4 events at FX Street were chat. And I'm like, no. I want to show live markets. I want to show people how to do it. I want to tell people and show people how to do it live. They're like, we don't have that technology. I said, I have the technology. So I paid $1,000 every time I did non-farm payrolls live. It cost me $1,000 just for the one event because we had so many people attend from FX Street. Isn't that killer? And they're like, ooh, this is like a special event. They had to prepare for it and everything. So I paid $1,000 a month for probably 5 years, giving away my secrets on FX Street for free. YouTube hadn't been invented yet. Still at this point. This is before YouTube. Isn't that funny? Yeah. So here we are. This is what I did way back then before, if back when you would have gone to Barnes and Noble to buy a book, this is what I was doing. I just wanted to show you and share with you how unusual all of this is and how it leads to what we do today and where we are today, you should be able to look at this and know how to trade. This is enough information. You don't understand this, you don't understand the tools. Isn't that great? So if you're going to be able to read a chart properly, you need to understand what it's actually saying. Okay? And other people are just shocked this is happening. Well, they shouldn't be. Okay, I think some of these are going to change over the next few days. Oops. Because of what happened 12 hours ago in China. All right, if you don't understand, well, you know what? I already covered this an hour and a half, 2 hours ago. There's a recording, a video's been done. I've gone through it in great depth. If you don't know that, you're not in the game. And so, based on what has changed recently, literally in the last 12 hours or so, I suspect that this might change. And we already have plans around that. Now, this isn't technical or fundamental. It's really both. This is market sentiment. Yeah. Okay. Isn't that neat? Okay. Some of you are like, what about gold? Oh, yeah. Well, I spent probably a half an hour talking about that earlier today. This is one of the things that we're going to use. You have fundamentals first, then you have technicals, and then you have sentiment. Whoa. So we've read 78 articles this week on 5 different websites, and it's negative right now. Gold. Fundamentally, it's bullish, but right now, the stories are negative. The sentiment. The market isn't in love with gold at the moment. So imagine, though, you're fundamentally bullish. What if you then see technically a bullish setup? Yeah. Does it mean you can't take it? No. But what if sentiment drops after you bought it? What if sentiment rises after you bought it? How does it impact your risk management? Yeah, TT is a bear. Sweet. Well, then that would give you permission to sell lower highs, wouldn't it? You see the importance of that, TT? And what if in the next 3 days, right? What if in the next 3 or 4 days, this goes from negative to neutral to positive, and you're a bear on gold? You might want to adjust your risk tolerance. You might be aggressively a bear, but that would tell you to maybe become a little more conservative as a bear. Or maybe even take the money and run and wait for the next setup. Yes, and I see that on the weekly, but I don't see that fundamentally. Okay? What you would need to see for that, TT, is that oil prices break lower than 67 and we're more like 50 than 67. And then CPI over the next few weeks, CPI, PCE, PPI, they start coming down. Then the Fed is the expectations. So now in the Fed funds futures market, expectations is that the Fed will add a cut to the June policy meeting, and in which case gold would be falling back down to 29 and maybe even lower. So if you understand that, then yeah, if that's what you're thinking and that's what you're looking for, see, it's a narrative. And I talked about this the other day at traders.com in a coaching session, that you want to be able to create narratives so that you have basically a thematic trading strategy, so that you know when to be confident and when not to be confident, to know when you're right or when you're probably not right, and when you should be adjusting. You're not reacting, but you've done some analysis, you have the data, and you say, well, in this case, I think inflation's going to fall. Okay? Why? Oil. What's a consequence of falling oil? Falling interest rates. Well, if oil's falling, inflation's falling, interest rates are falling, do you want to own gold or do you not want to own gold? I don't know. But the thing is, I want you to be able to think about it. Have a narrative. One way to read other people's narratives, TT, is let's say you're a seller of gold. Right now, the market's generally okay with that. Fundamentally, it's too early to make that call, but you technically might make the call. That's fine. You made a different decision. That's okay. Maybe you made the decision on short-term charts. Maybe you made the decision on long-term charts. Maybe you did it on a pattern. Maybe you guessed. Doesn't matter. But now you have a way to quantitatively measure whether the market agrees with you or disagrees with you, and by how much. They really agree with you, or they just, yeah, pretty much agree with you. Well, right now they pretty much agree with you. That's fine. So now you can go ahead and do what you want to do, and you made that decision some other way. But if the market sentiment changes, you will be able to quantitatively see it and then make appropriate judgment calls to your risk management. You see how genius this is? Everybody else guesses. So when it comes to like fundamentals, what do you think about gold? Huh? I don't want to go there. I want to go here. Gold. Okay. Fundamentally, very bullish. Okay. Fine. Good. Great. And we are above the average. Cool. So do we buy dips? Maybe. Okay. Okay. Now, this is going to mean two different things. Okay. This is going to mean two different things to two different people. A bull probably wants this. And a bear probably wants this. And technically, I can't really tell the difference. Fundamentally, remember this score here, this very bullish, has very little to do with this chart. It's a very small part of that decision. So this pattern is not very bullish. That doesn't look very bullish to me. That looks like a range, right? So gold is sideways right now. Okay? quantitative analysis of macroeconomic data would suggest this is generally what's going on. Well, things do change. They do change. They do change fundamentally. So now you got TT wants to sell it. Well, I can tell you TT doesn't want gold to go above 2,950. And TT is going to have a stop right here. I can read your mind, TT. So this is TT's trading plan, a variation of this. Is that wrong? No. Statistically, the slope of the mean is negative. I could see that. Is this a good pattern? No, but if you were a bear, you're going to try to set something up around lower high or double top. Right? So there's plan A, plan B, stop. Right? If you're a bear, that's all there is, isn't there? Is there any other pattern? Well, you either sell a lower high or a double top. That's it, right? And where would a bear exit? A higher high. Sweet. So it's not complicated. So you're in a zone now, TT. If you were a bear, the way I would analyze this if I were me is that from here to here is your sell zone. Now you could use pivot points to do this. You can do other things to do this. There's a lot of assumptions. So your variables, right, reflect that you're bearish and you need to watch your variables. But if it was going to fall, that is probably how you would want to do it. Would you sell a higher high? That doesn't make sense. Even if you're like, well, I think it's going to be a head and shoulders. You're guessing. There's no way for you to know. So if you're a bear, you sell a lower high or a double top. That's it. Those are the only two logical scenarios. Cool. So now you could say, all right, so you're thinking about maybe selling some gold. All right. So you go to technicals now. You go to commodities. Okay. And XAU. Oh, look, maybe a breakdown 15 minutes ago. Okay. Channel up breakout. So how do you trade this? First of all, you download the cheat sheet in the description below so that you know how to do that. Cool. You see it on the 30-minute, you see it on the 60-minute. Is that bullish? It's not bullish. So you'd have to be a bear. Okay? And it's a breakout. It's like a trap and break. XAU 15-minute chart. Okay? Consolidation on a 15-minute chart. You see it? That's what a triangle is. Consolidation. Sideways, 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 sideways. This is not a prediction. It says if we have a breakout of a triangle, then you want to sell the lower high, lower, and get the lower low. So TT has options, or potential, I should say. Potential today. So on the higher time frame, if TT gets that right on the 30-minute and 60-minute, then this will come down and it'll make a lower low lower than B. And then you want to measure C to D, and somewhere in this zone probably sell, but that won't happen for the end of the week or next week. So that's next week's swing trade. Dude, you see the level that your trading can become? You can become a very smart, intelligent trader. And that's all from TT's point of view. That's not necessarily right, but TT should be able to execute with precision TT's strategy and be able to confirm or deny that the strategy is working. But someone on the other side of that trade can do the same thing. Now, they think up, not down. So is this a good opportunity for bulls? No. Is that a good opportunity for bulls? No. Is that a good opportunity for bulls? No. Okay? Is this a good opportunity for bulls? No, but I'll tell you what. Remember, this is not a pattern. It's an emerging pattern. It hasn't happened yet. It's trying to do the technical analysis for you. It's an assistant. It's aiding you. It's saying, well, if you are a bear, like, think of it this way. This analyst works for you. You're the decision maker on the trading desk. And you said, hey, technical analyst, I'm a bear on gold. Is there an opportunity? Well, sir, well, ma'am, if you're a bear and you want to sell, we've been going up from what I call a previous high to a previous low. Okay? A to B. Now, if you are correct in your bearishness, it cannot go higher. See, if C is up here, it's not a bearish setup. It's just not. If it makes a higher high, it's not a good time to sell. So you have to wait. So what do we know? If you're going to sell because you're a bear, it can't go higher than A. So there's only two scenarios. Lower than A or at A, but not higher than A. It's either a lower high or a double top. Well, an ABCD is not a double top, so it's assuming not a double top. All it's doing too, by the way, is instead of taking off the old high, it takes off the old low. Support becomes a resistance. So it's guesstimating. Okay, it's guesstimating somewhere around C. The reason it popped up like this is it got to that C zone and we got some red candles right in there. It's hard to see, but they're there. Otherwise, this pattern wouldn't have shown up. So it was waiting and waiting and waiting. Okay? If C is higher than A, don't issue an ABCD emerging pattern because that would be impossible. But if somewhere around here, okay, red candles do form, then it's possible it makes a lower low. Cool. So if you're a bear, oh yeah, you find that interesting. If you're a bull, it's kind of a threat. But if C is up here, it's an opportunity. Why? To buy the higher high? Oh, I don't buy higher highs. Okay, I buy higher lows. And so this technical analyst works for me, but I'm the decision maker. And I say, oh, well, TT's a bear. I get that. So there's a real bearish threat. TT is probably going to sell this and go for 28. Sweet. So if that happens, I'll take a walk. Do I buy D? No, because I don't buy lower lows. But I would expect if I'm a bull, it comes all the way back to C. Now, what if we go from D to C? Okay, then I'm going to use B as support, and then I'm going to buy a dip. And why would I do something like that? Because I'm a bull, and that's a reversal pattern we call an inverse head and shoulders. So it's not that one is right and one is wrong. You need to know how to trade. If you don't know how to trade, none of this is going to help you. You're still going to make wrong decisions because you don't know how to trade. That's why we have performance coaching. We had, 6 hours of performance coaching yesterday? Yeah. All right, so the stock market's about to open. Let me show you what's on the coaching schedule. I moved Tuesday's week on the street to Wednesday. See, it says Tuesday, but here it says Wednesday. So make sure you RSVP. I switched it from Tuesday to Wednesday last night, and several people didn't get the email that I had rescheduled it, and it may be because they didn't RSVP. They just go here every day and click it. No, RSVP, so you get the correspondence. In this case, I switched it from Tuesday to Wednesday, and most people were notified. Cool. Cool. So thank you, Traders Way, for being an ECN. I appreciate you. So we use TRADARS, which helps you with your technical and fundamental analysis. Traders Way helps you with your execution. Cheaper, faster, better, stronger. Yeah, they're good people. I've known them for over a decade. Make sure you get yourself an ECN. Unless you like your broker trading against you, then go ahead and use somebody else. You're like, I love it when I lose money, my broker keeps all that money for themselves. No. I don't like that at all. So anyways, Traders Way. And TRADARS is the way. Yeah. So that just happened. I'll see you today at 4. Peace on earth, may the pips be with you. May your profits be above average.